Hey everyone. ARM reported financial results for the quarter that ended June 30th after the markets closed on Wednesday, July 31st. I'll review those figures that ARM reported and highlight the big picture items and the big progress ARM made in its recent quarter. I'll also update my buy recommendation for ARM holding stock. Coming into the quarter, I did not have ARM holding stock rated as a buy. I had it rated as a hold because of its very high valuation and admitted that the company has excellent prospects, but the valuation was too rich for purchase. You're going to want to tune in to see if I'm changing that recommendation following these results. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So in the shareholder letter, ARM Holdings informed investors that in the first quarter, they delivered record revenues and exceeded the high end of our guidance range for both revenue and non-GAAP EPS. And given these beats on the top and bottom line, investors were a little disappointed that the company didn't upgrade their annual guidance. They're starting off the year so robustly, investors were hoping that they would raise the target for the full year outlook. That being said, the company has consistently beat on the top and bottom line. I wouldn't be surprised if in the next quarter, the company raises the targets for full year numbers. Royalty revenue was strong as rising adoption of its V9 technology is lifting royalty revenue per device. They expect the migration of AI from the cloud to edge devices to drive even higher compute demand per device over time, and ARM's unprecedented share means that it's uniquely positioned to benefit from this migration, and this will increase the royalty revenue per chip. And what this means is, as time goes on, right now, a lot of the compute requirements for artificial intelligence are happening in data centers. They're not happening on devices like phones and computers and tablets. But over time, ARM expects more of that computing power to move to devices, and that's going to require these devices to become more powerful and require more computing capacity, which will benefit ARM in that regard, and it'll increase its royalty revenue per chip. During the quarter, Microsoft announced its first generation of Copilot PCs on ARM with double the battery life of the closest PC competitor and on par with its ARM-based Mac OS counterpart. And this comes just in time for the replacement cycle for personal computers. People bought computers in 2020 and 2021 when they had to work from home and learn from home. And then that created a gap in personal computer purchases in 2022 and 2023. The PC industry moderately rebounded in 2024 with low to mid-single digit growth so far. But in 2025 and 2026, those rates of growth are likely to increase as these personal computers get infused with artificial intelligence and that replacement cycle hits into the prime area of replacement. So that's going to be a tailwind for ARM in 2025 and 2026. In more product news, today, 10 of the world's largest hyperscalers are developing and deploying ARM-based chips into their data centers, and these include AWS from Amazon, Google, Microsoft, Oracle Cloud, and they choose ARM because of its superior performance and energy efficiency. So ARM is in the 10 of the world's largest hyperscalers, and these are the companies that are investing tens of billions of dollars building out their AI data centers. ARM has one of the world's largest compute ecosystems with more than 20 million software developers, which is up from 15 million just 1 year ago. And this feeds into its positive virtuous cycle with more developers using ARM-based technology. That's going to increase the amount of people that want to purchase and infuse their products with ARM technology. And then the more products that are using ARM-based technology, it's going to encourage more developers to want to develop on the ARM software platform, and that feeds its positive virtuous cycle. Also during the quarter, Google announced new AI capabilities for Android phones, including the integration of their Gemini AI model directly on Android. Already 70% of AI-enabled apps in the Google Play Store run directly on the ARM CPU, and the addition of Gemini will enable more apps to take advantage of the ARM compute platform. excellent news for ARM and ARM stock investors. So you might say, all of this good news, why was ARM's stock price down following the earnings release? It's down over 3% following the highlights. And it's for a couple of reasons. Number one, heading into the quarter, the stock price was already or above 80. And given that expensive valuation, you would expect the retrenchment. As I told investors, I did not have ARM stock rated as a buy. I've had it rated as a hold, and I last updated that recommendation on May 14th. And you could see ARM's valuation has come down since then. And one of the reasons I had downgraded it is because of that premium valuation. When ARM was trading at this lower valuation closer to 40, I had ARM rated as a buy. And then as the valuation increased, I told investors it was time to take profits in ARM stock because this valuation near 100 is too company. Even though it has excellent prospects, there comes a point when an excellent company becomes a poor investment price. And that's what I felt was happening with ARM stock when it approaches these levels closer to a forward PE of 100. Another reason ARM's stock price is falling despite an excellent quarter is because of the guidance. You can see here for the first quarter, the company guided $900 million in revenue at the midpoint, and it delivered $939 million. So way ahead of expectations. Similarly, for earnings per share, it guided to 34 cents at the midpoint, and it delivered 40 cents. So well ahead of expectations in both earnings per share and revenue. But despite that fact, the company left its fiscal year 2025 outlook on revenue and earnings per share with no change. It didn't upgrade this despite starting off. So that discourages investors and it has them think, well, if they're not upgrading their guidance for the rest of the year, they must see something that investors are not seeing just yet, and they think that the rest of the year is not going to be as strong as the first quarter. In fact, in one area of weakness that I noticed is in the remaining performance obligations, which were up 29% year over year, but they were down 13% from the previous quarter due to the contribution of revenue from backlog during the quarter. What this means is that the company delivered on its obligations in the quarter to a certain degree, and they did not sign new contracts to replace those that they delivered during the quarter. So they had a certain amount of orders going into the quarter. They worked on those orders and they delivered on those orders, which decreased the remaining performance obligations and that RPO back up. But new orders didn't come in to bring the RPO back up during the quarter, and so it declined 13% sequentially. Now, this isn't terrible news. It's just being picky and highlighting those little things that cause the stock price to fall. And when you have a stock price that's trading at such a premium valuation, it's little things like this that cause the price to come down. Investors want perfection from a company that's trading at a forward PE close to valuation to drop. Now, to update my recommendation on ARM holdings following the dip, the small dip, it's not really a big dip in price, I'm keeping ARM stock rated as a hold. I still think the valuation premium is too much for this excellent business. I would like to see the forward PE ratio fall further before I recommend or I consider ARM as an investment. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.